Welcome back to the Medina podcast, ladies and gentlemen. Today I wanted to get right into the stock market fire sale that's coming. Like I said before, this is a podcast that's geared to the little guy. I want to spread knowledge, information, facts about the state of the economy and how to help the little guy out, how to help the average person become a better investor. And one of those ways right now is showing people the fire sale that's coming. Hopefully I pray that people are able to take this information and prepare, because this stuff is real. And before I get in any further into the discussion, I also wanted to just give you guys this, of course, statement. I'd rather have a gun and not need it than need it and not have it. This is one of those moments, guys, where I urge people, hey, I definitely advise, prepare for the times that are coming. Don't go out, splurge. But with that being said, guys, I wanted to talk about the fire sale that's coming. Specifically the automotive industry. That's the one that I wanted to talk about, because I was studying some of their balance sheets, some of their income statements, statement of free cash flow, and I was just completely blown away, with what I was seeing. For example, GM right now sitting on $100 billion of debt. Their net income is almost 1% of what their debt is. Ford is sitting on almost $200 billion of debt. Their net income right now is negative $2 billion. They're operating at a loss because of the pandemic. BMW is another company that's also like around $100 billion, and their net income right now is like around $4 billion, guys. So, I could go on and on and on about how these automotive companies' balance sheets are right now, heavily loaded with debt. And all that says to me right now, guys, is this. The economy is not getting any better. Even with the stimulus checks that the government has been able to supply, the American public, we have been seeing that these businesses continue to contract. They continue to contract even with the help. Airlines just completely one after the other, just folding and, just telling the workers, hey, we're going to have to lay off more and more and more. I was in the airport the other day, and I went in there, and usually on a summer day, you would see probably, at 5 a.m, the airport would be packed. I went in there and there was basically nobody. There was no one in there. I went to go take some people, and it was completely empty, guys. I couldn't believe it. I was like, this is crazy. And, you also have people like Trump going on the news and bashing Warren Buffett, saying, hey, tell Warren Buffett now, what does he think of that? We're bailing out the industries and he was selling his stocks. Well, the Wall Street Journal just keeps telling us how they're laying off more and more people. So obviously that means these industries are going for a period of just massive deflation. They're going down. If you go see the stocks in the stock market, whether it's the airlines, whether it's the steel industry, whether it's the automotive industry, they have been completely getting tanked. And primarily is this, when people receive a certain amount of information and knowledge, they're able to see things a little more clearly. And one of them is this, a lot of these industries, okay, that COVID has been, hitting them hard, but they're also cyclical. And all that means is that they operate in a cycle, ladies and gentlemen. So right now, and a cycle could last anywhere from 3 to 5 or even 10 years. So yeah, sometimes you would think, oh no, they're going down, they'll bounce back up. No, sometimes cycles take a very long time. And some of these stocks have been completely tanking for a while. And all I'm saying is that for the most part, what I'm believing, what I'm predicting is that they're going to continue to fold a lot of these companies, even the big branded ones. I feel like we're going to get big surprises when some of them just start coming, on air and saying, hey, we're going to have to file for bankruptcy. And, like I said before, you go see their balance sheets and you see them sitting on almost $200 billion of debt. And the only way they're going to be able to survive the upcoming months is by taking on more debt and laying off more people. So, of course, I've talked to a couple people, and I've actually heard someone tell me, hey, Chris, I hear you out, man, but what happens when, they file for bankruptcy? Let's say, I hear you out, the numbers sound great, but what happens when they file for bankruptcy and they just stay down? Because I haven't seen a lot of, great companies just like, you know, jump out of bankruptcy like out of nowhere. I believe they're going to go bankrupt and stay bankrupt. And if you are one of those people, you know, definitely leave a comment in the section below. Tell me, why do you believe that they will go bankrupt and why they'll stay bankrupt? Or why do you believe that they won't even go bankrupt at all? You know, if you're one of those people that believe there won't be a fire sale, please let me know. You know, because obviously these companies are sitting on $200 billion of debt. You know, the revenue is probably like 1%. Their net income is 1% of what their debt is. So how am I going to be able to pay off my, you know, lenders? How am I going to be able to pay them off? How am I be able to pay off my interest if I'm operating at a loss, if I'm cutting down people, if the average American doesn't want to come and shop at my store? You know, and let's say, you know, the Fed continues to print their way into destruction, and then your currency has no value. So how many people are going to want to come and shop at your store? This is what I'm trying to tell you guys. Everything is pointing very clear that there will be a fire sale. You know, a lot of these stocks right now are propped up in the stock market, and that's another indicator saying, hey, you know, we're at a massive bubble right now. People are saying, hey, we're recovering, everything is great. But you go outside and you see businesses still closing, other businesses filing for bankrupt, and other businesses just taking off massive amounts of loans just to survive. And, you know, I wanted to read a Wall Street Journal article right here, just a statement that said Ms. Pluck landed on a 2020 Mazda CX-9 when she found out the loan would have no interest and no down payment was required. She financed $35,900 over about 5 years to purchase the SUV and used her $2,500 trade-in credit for her old CX-9 as a down payment. That still leaves her with a $570 monthly payment. You know, this is the average American person right here, you know, I wanted to describe, because this is the crisis that we're going to go into, you know, where a person is in a situation where it's like, hey, you know, there's a crisis going on, and these dealerships are giving these cars away because nobody wants to shop for them right now. Nobody has the cash right now or the luxury to say, hey, I want to go buy a $40,000 car right now. Like, nobody has that luxury. Well, at least the average person doesn't have that luxury. So she financed almost $40,000, like, just completely out of thin air. Boom. She just got a credit for 40 grand. Let's assume 40 grand. And let's put a situation like this. What happens when her job closes back down during the winter? Let's give a theoretical example. What happens when her job closes back down? Or let's say another example, which is what I'm predicting is going to happen. Let's say COVID spikes over the winter. The Fed keeps printing more money, and now her dollar has less value. She doesn't want to go into work because the dollar she's receiving has no value. So now she's sitting on all this debt. Where she's going to pay off this debt? You know, and let's say it was to Ford. She went to Ford, and let's say, oh, well, now I have this $40,000 loan I owe you guys, but I can't pay it off. Now Ford is going to have to, you know, write these loans off their books, you know, just completely. And it's going to be one after another. It's going to be one after another. We're going to start seeing it. And these companies, they're going to go completely broke because they're, you know, borrowers are not paying them back. They're not able to pay off their lenders. And it's going to be a domino effect. And what's that going to do? Is going to drive their earnings down, guys. Their earnings are going to be driven down. They already are, by the way. But what I'm predicting is that it's going to continue. And we already know what happened in 2008 when a lot of these companies had to come up front and start telling people, hey, listen, this was a whole scheme. Our revenues are down, by the way, because of what's happening. It was all out in the public. What happened? Share prices just started to tumble one after another. And, you know, this is going to be another situation that we're going to have. Also, what I wanted to touch on was that, you know, not only are these automotive companies' revenues are going to be hurt by all that they're seeing, well, all that's going on with COVID, you know, with people not being able to take out loans the right way, you know, etc. But also because of change in consumer behavior. You know, a lot of people right now are switching more to electric vehicles. You know, a lot of governments are putting policies in place to make people, you know, transfer into electric vehicles. A lot of people are urging people to go green. So what happens when I can't go buy a gasoline powered vehicle? What happens when you can't supply me, you know, a line of electric vehicles that I can say, hey, I like this one? Because if I go into your shop and I say, oh, there's only like maybe one or two electric vehicles, I may not want them. I may go to Tesla because they have, you know, a line of electric vehicles, and I might, obviously, out of probability and statistics, find one that I like. So that's also another big red flag right there. You know, I feel like these companies are going to go on a downward trend for a very long time, but I do also believe that they will emerge out of this, you know, victorious. There will be another great boom in the automotive industry, you know, with a lot of electric vehicles, hydrogen vehicles. Like, this stuff is going to, you know, go on a complete bull run. But the reason for this podcast was also just to, you know, spread an alarm. Well, sound the alarm, spread awareness to the average Joe, just to say, hey, you know, there's something that we must be looking at here. There's something that, you know, we have to be paying attention here. And it's the fact that there's a fire sale that's coming. You know, these are the moments where people like Warren Buffett get completely rich. You know, other rich people just say, hey, I'm going to sit on cash right now, but as soon as there's a fire sale, I'm going to start buying it up. And that's how people get really rich. And, you know, I just want to spread awareness on that, guys. You know, another company that I wanted to show you guys an example of how this is going to look was, you know, GE. You know, General Electric, I remember I was sitting in class and I was just seeing their shares tumble. Like, they were just completely cracking down because they had to go in and fess up, hey, you know, we have too much debt. And we're not able to pay it off right now. So what happened to the share price? They just completely started tanking. And that's going to be the same way with a lot of automotive companies and just a lot of more other companies in general. But for the sake of the podcast, I want to stick to the automotive industry. You know, Wall Street definitely has something for cars. You know, we've been seeing it with Tesla, but Tesla's a whole different story, guys, because, you know, I wouldn't really, you know, put Tesla in the automotive industry, because Tesla is really more considered an energy company. They're, you know, just positioning themselves to supply the growing demand of, you know, demand for, you know, more renewable energy. That's what they're doing. And I think it's genius. I do think Tesla's in the growth stage right now, and they will continue to be on a growth stage. Now, whether or not their stocks will tumble in the fire sale, I don't know, because they're very early on in the game. I don't know what they can do. Anything can happen in the stock market. But what I do know is that all the other average automotive companies, forget about it. They're going to get decimated. And, you know, the stats are right there. The information is right there. You know, you go see their balance sheets. Go look at their income statements. Go look at their stocks. And, you know, even go read some articles on the Wall Street Journal. And please, just let me know in the comment section if you believe with this or you don't. You know, please let me know. I want to hear what you guys have to say. And we'll leave it at that for today, guys. If you wanted to hear my podcast on Anchor, the link will be below, or Spotify. Till next time, much love.